We are just days away till the next Fed meeting, I guess next week. We also have a CPI print. How are markets, when you look into the internals, how are they trading?
Well, Seema, the markets have been actually pretty strong. When you look at the internals of the market, they've been improving coming off of the October lows. We've been seeing the number of stocks improving in terms of market breadth, stocks above their 50, 200-day moving averages. We've actually been seeing also an expansion in the number of stocks that are making 26-week new highs, Seema. But the challenge is for a lot of investors, there is such a negative viewpoint and perspective coming into the end of the year that most investors are short. And so at this point in time, Seema, the pain trade is higher. And so if we get some economic data that comes out next week that's going to be sort of below expectations in terms of inflation, I think this market's got a real shot to take another hop higher in here.
What is the correlation these days between the stock market and economic data? Because I know it can really vary depending on where we are in an economic cycle.
Well, Seema, good news is in terms of the economic numbers at this point in time is sort of bad news because the perception among most investors right now is that if the economy stays stronger for longer, then the Fed is going to have to continue to keep raising rates, and that terminal rate would ultimately have to go higher. But I think the most interesting thing to think about in this market, though, is what's been happening with the secular change in 10-year bond yields. It's been a 40-year downtrend reversal. A lot of investors are expecting inflation to be higher, but when you come back and you look at rates, we think they could actually be coming down and perhaps go as low as 3 to 3.25 in 2023, which I think would ultimately be a catalyst for equity markets.
Yeah, unpack that point you just made there, because some confusion around, yes, the terminal rate may be headed higher, 5-6%, if you look at the Fed fund futures rate, yet where we're trading now at 3.5%, does that make sense to you?
Well, I think what it's telling us is that the Fed's activities are really actually starting to have an impact. And I think a lot of investors sort of look at the forward sort of expectations of where rates are going to be through 2023. And it looks like that you could see the end of the rate hikes by the time you get to mid 2023 and perhaps even see some cuts. Again, that's not my viewpoint. That's just what the market has sort of been priced in at this point in time.
4 weeks left in the year. I can't believe it. What sector do you think is best positioned going into the end?
Well, into the end of the year and into 2023, we actually just upgraded here this morning the industrial sector, financials. We took technology from an overweight to a neutral, and we also downgraded healthcare from an underweight to a neutral. So right now into 2023, Seema, I would say stay overweight energy, be overweight financials, and be overweight industrials. And I think the big long-term theme to think about in 2023 is really going to be the reshoring trade. In stocks like Rockwell Automation, Johnson Controls are going to be really well positioned, we think, in the year ahead.